Hello, folks. Bill and Brian here with Energy Road. Today with a weekly update. Hey, Brian, roll that logo. Hey, folks, today we're going to talk a little bit about the weather. We're going to talk about, see if we can't find out where that hole is in the bottom of the barrel of crude oil that keeps leaking out the price. And we're going to be talking about a little bit about natural gas, where we're going on that. So, Brian, those are three really interesting subjects, at least it is to us. So we don't really care about everybody else. We're going to be interested in talking about, where do you want to go first?
Well, let's see. We are going to talk about crude oil for 5 minutes, and we're going to try and keep it to 5 minutes. And we will respond to comments live if you send them. I believe we can see them both from LinkedIn and YouTube. So if you have a question, shoot away. But let's take a look. Crude has fallen off the table. And I was just getting text. Tom, thanks for reaching out. Yeah, oil might take center stage today because it has fallen off the table. OPEC was meeting, but the main thing was we had a huge inventory build on gasoline, which is normal for this type of time of year. And let's take a quick look at this. So commercial crude stocks actually had a draw, but gasoline inventories, I mean, a 6 million barrel a day inventory build on gasoline, that is very big. Let's take a look at what history shows there. Not refined products, fundamentals, and let's take a look at motor gasoline. Yeah. So if you can take a look at this, we've gone from the 5-year lows and we've jumped up, and we've even continued. This doesn't include today's announcement because the EIA's API has not updated. So this takes us kind of back to a 5-year average on gasoline, but this is translated into concern about economies. And the biggest concern right now is demand. And distillate had a draw, commercial crude had a draw. So I don't think the gasoline build is as big of a deal as people are making it. So I think the crude, let's take a look at the chart. I mean, look at this. This is a massive drop. But we've dropped from the 90s. We touched 95 and we've dropped all the way down. We've been advising our clients that there is a potential for a drop to 85, 94. We were expecting it back here. It went up and it finally broke down through here. So it could continue. I think it's going to hang around this 85, 94 level. There are some people out in the marketplace. Let's see, oil falls on more than $3 on demand fears. Saudi confirms cuts to the end of the year. I've heard Russia is the same. And city analysts are piling on and saying they could see it tumbling into the low $70 next year. I don't see that at all. I think that's lunacy. And if you want to find out more, you can learn more. Bill, what's your thoughts on crude oil before I go anywhere else?
Well, first of all, the $70 to me sounds a little bit more like something I heard out of Dumb and Dumber. When he asked her if there was a chance that they could date, she goes, "Well, it's once in a million." So what you're saying is there's a chance. So yes, there's a chance that it can get into the
Remain calm. All is well.
So, I still think crude oil has a lot of strength left in it. I think this right here is a chance for some of the bears to push down, and there wasn't much to support it. We're in shoulder months. We're building gas for the driving season for Thanksgiving and Christmas. So that's what's going on. So this usually happens every year. The refineries are running at probably one of the higher efficiency rates that we've had in just a few months because they're all back from their turnarounds. And so they're all working. The fundamentals just always rule when it's all said and done. I mean, you can only push something down so far on hype. At some point, you have to look at the facts. And so, anyway, so I expect crude oil to rebound. I can't give you a time frame yet because I don't know how far the bears are going to push this down. I think that they're probably down to their support levels right now, or getting pretty close to them. And I think we'll see it start to climb back up. Remember, it goes down a whole lot faster than it comes back up.
Yep. So I will say that I do think we're kind of range bound between 100 and probably 60 at the low side. And I will make one comment.
Ryan, that's not a range. That's like space. $40 range.
Well, when I'm talking about this range, I am actually talking about a long-term. That's Brent. Okay, WTI. I'm talking about this long-term range. I mean, like I'm talking for the next 5 years, we're going to have a range bound. But I think that 60 to 100, I think is going to reset to 80 to 120 in 2024. I think there's some global things that are happening, but I do want to point out one thing. City analysts are talking about being below 70 next year. Well, the fact of the matter is that December, October, November, October, and September, August, all these months are currently trading below 70. That's not really a stretch.
No, they're trading below 80. They're in the 70s.
I mean, yes, what you said, not what I said. So let's see. To close off, there's a lot of bearish sentiment today, and we did have fundamentals come out today as far as inventory stocks. Commercial crude was a draw. Gasoline inventories was a large build, and that's what is spooking the market today. But distillate also came down. So we're gonna potentially see some of these spreads reemerge on distillates or diesel to regular, and some of these are really going to happen. So that's all I got to say about crude, unless anybody drops in some comments. That we are going to get a little deeper on crude. We did do one last week which was touching on whether or not $100 is in play. And I'd say right now that I still hold to that. And
hey,
I think,
as the guy who hung on to his $3 till the very end on the October contract, I'm going to hang on to my crude $99.27 by the end of the year for the current contract.
So your target end of year is 99.27, right, Bill?
That's correct.
Okay, mine is 95. So I think this is going to be temporary. I think the supply cuts that Saudi Arabia and Russia has going into winter are going to be felt. Now we are entering a lower demand period, and China has increased their stocks as much as we've decreased ours. So there's a lot of interesting things that are happening. But when I take a look at the geopolitical landscape, we are set for volatility, and that volatility is likely to be to the upside. So I wouldn't lose faith on crude oil. So any more to say on that?
That's all I got right now.
Okay, let's take a look at gas. Now I want to say we've had this battle for $3 for some time. And for those of you that are interested, if you want to learn a little bit more about Rogue Edge, there's information down below. We have a platform that gives you access to 150 interactive and downloadable charts. You can interact, you can download. It's $89 a month. And in addition to that, you get a weekly report, which at the beginning of this week, we said this is the week that this is the battle for $3. So you get a weekly report, you get a weekly video like this, plus you have access to our Discord channel where we cover day-to-day probabilities on what might be happening to the market, and we post these every single day. So that said, when I take a look, we were discussing this with our Rogue members on Monday that, yep, we are looking at $3. And let's see, where do we start Monday? We closed Monday at 284, and we said this is the week we're going to see $3, and it's panned out that way. I would be a little concerned of crude dragging this down. So on the technical side of the equation, crude could be dragging this down. And so let's see.
So
Dylan has a comment. Dylan, thanks for chiming in. He's with Bill, 98.50 for WTI by the year end. Let's go. Giddy up, right, Dylan?
yeah, exactly.
Thanks
Hey,
for commenting,
Brian, let's pause for a second here and pull up that weather map that you got hiding in there somewhere.
Okay.
Because this is the
now before I do.
Oh no.
Yeah, this is it's a dark mystery. So this is the winter forecast. These are by our friends at Prestige Weather. And for those that are interested and serious on weather, you can go to prestigeweather.com. They have subscriptions at $5 a month, and they provide us seasonal forecasts. And what we have uncovered with them is the remainder of October and November are likely to be a little warmer than normal. So we're going to have a sluggish start to winter, but that warmer than normal means that's going to take a hit on some of the storage injections for the balance of end of season, which right now most people are at 3.8 TCF. We're underneath that because we see production dropping. We'll get to that in a bit. But a warmer than normal October and warmer than normal November, and then in December it starts. And tell me, Bill, what happens in January to April?
It gets cold. It's like almost every year it gets cold. Mm-hmm. So this is not a heavy prediction, but I think we're seeing a little bit more precipitation. It's what we were talking to with Prestige Weather. And what's interesting is the Northwest, Pacific Northwest, is going to be a little bit warmer up there. And so it's going to drive more conspiracy theories than you can ever imagine coming out of that part of the country.
Well, precipitation in the Pac Northwest is going to be below average. So what that means is that their snowpack is going to set up a potentially volatile natural gas price for next summer.
That's right. Because they won't be able to use their I've actually been out there during a drought, and it's interesting that when they don't have access, and especially California does not have access to Bonneville Power's hydro, the power prices just skyrocket. And so I think we're setting up for that to happen next spring.
Yes. So here's the thing. We're going to have a sluggish start to winter. And with that sluggish start, I expect natural gas might take some price hits. That said, I see $3 as kind of a key benchmark and end of year expectation. We just covered this, Bill. What was I think let's take a look at this. End of year for natural gas on the financial side. And if we look, the January contract right now is at 356 as of last night's close. I'm expecting this to push $4.
I'm not sure it's going to be on the January contract. I think it'll be the February contract in January. We'll go to $4.
Okay. And February is right at 350. So they're about in tandem. There may be some sluggish starts to the winter, but again, let's take a look at what Prestige.
It's also going to last a little bit longer. I mean, based on the weather predictions we're seeing, Whereas usually we think of winter being over in mid-March. I think it's going to go all the way out into April this year.
Yep.
And so that'll be interesting. And in talking to our guys there, they're looking at pretty much a delayed first freeze, which is important. The first freeze is always important. So we'll have more on that cause in 2 weeks. We're going to have Prestige Weather on our live.
Yeah, not next Wednesday, but the Wednesday after.
2 weeks from
Prestige
today.
Weather. We're going to get in deeper on this. This is the seasonal outlook for winter 2023. Now, what I'd say is for November, we might be warmer than normal. It's going to be nice. It's going to be nice for Thanksgiving. So everybody's going to have this. But take a look at this. This is polar vortex, Arctic blast, winter battle zone, very stormy, worst of winter. All of this in the demand centers. So natural gas is going to peak. It's going to spike up. And this is happening all at the same time for something that those of you that have been watching, we've been discussing it. The shale decline in rigs. I mean, if you take a look at what this has dropped off from, in May, we're at 755 rigs. We're down to 623. And don't make any mistake. This is going to have very big implications for supply. And when we take a look at supply, let's take a look at that's it, storage. When we take a look at supply, what a lot of people look at is they look at what happened in 2022. So let me take this. This is 2022. We went from roughly the mid 90s all the way up to 101. So roughly 5 BCF a day of growth in 2022. But let's look at what's happened in 2023 thus far. We have been in a band. I'm not going to count February because we had some.
Is that a rock and roll band?
What a rock and roll band?
You said we were in a band.
Oh, no. I'm not going to count February. But we've been in a range of 100 to 102. So we've been in this range, and instead of growing by 5 BCF a day, I mean, we entered the year at 100, and our peak is 102.8, and that is based on rigs that were, let's see where we were in 2022, and that was based on 768 rigs. So we had a lot more rigs back behind it, but this is the key thing. We're seeing rig count that's gone down. We've seen production. Let's go to declines. Okay, so every month we decline roughly 3 BCF a day, 3.3 BCF a day. This is new production being brought online by new rigs. And if you take a look, since last year, we have been dropping how much new production has been coming online, and we have fallen off the table. That's before the rig count really dropped. So when we're taking a look at the net change, our production is just starting to decline in the shale basins. And all these charts are interactive, downloadable. They're part of our subscription, only $89 a month. And if you have interest, you can reach out to us down below. But Bill, what's your comment there? Let's take a look at the balance.
Well, I think you're also seeing the decline increase. It's not like it's going to get smaller. It's not like it's going to flatline. The actual decline of the wells are beginning to increase, and that's what you're going to see because they're new wells and because they're horizontal wells. They decline faster in the first year, and so I could see us continuing this decline, but at some point it'll start to bottom out. But I think we're probably 6 months to a year. If we had no drilling whatsoever, we would see that curve start to flatten out in about a year. And so, but
Well,
what that means is
currently we're at 101.2 BCF a day on production. Where do you see year-end exit?
oh gosh, doing these calculations in my head. I think we're going to be just at 100, maybe a tad bit below, but just right at 100.
Okay, I've got sub 99. I got 98. I'm probably a little aggressive there, and I'm putting this out on YouTube. Oil end of year target Bill is 99.27, and Brian is
As far as price, yeah.
95. We are not financial advisors. And Nat Gas. And when we do these, we are gonna post our expectation target end of year. Bill, what is your natural gas?
I think we will be still sub $4 for the current contract in December.
Okay.
But I think it'll be in the 390s. I think
390.
we'll be just below $4. I think we'll hit $4 in the first quarter of next year.
I'm gonna go 20 cents above you. I'm gonna go to 410 for year-end exit, and we are not financial advisors. So I just posted these out there. This is our end of year target for oil. And this is our end of year target for natural gas. And I do want to say hi to Giorgio and Dylan. We commented on yours earlier, but this is our natural gas end of year target. And when I take a look at the supply, we're at 101.2. Rigs have declined. I expect this to continue a little bit more. Let's take a look at what the rigs. Let's take a look. This got to load up. Not oil, natural gas. We are declining in the shale basin by 400,000 a day each month. So I don't think 98 is.
And increasing.
Mm-hmm. This is before rigs have really dropped off the table. But when I take a look at what our inventory draws, we're about 6% away from the 5-year average. Bear in mind, we started the season around 20% over the 5-year average. We've closed the gap, so demand has been strong. And let's see, Richard, I will hit you back on LinkedIn because my comments back go to YouTube, not LinkedIn, I don't think. But so we will get back to you, Richard, and thank you. When I take a look at what storage looks like, and with production faltering, storage down, or not down, but still slightly above the 5-year average. And when I look at our LNG sendouts, let's take a look at that real quick. Our LNG sendouts, this is just our exports. Look at this, 101 BCF a day, 101.2 BCF a day. We're close to 20 BCF, or 20% of the market is exported.
That's including Mexico, right?
That's right. That's right. I didn't. My words didn't match what I was showing. I'm including all exports to Mexico, exports to LNG, and when I take a look this next week, I think LNG was a little bit down, 11.8. Early reports this week is that we're back up above 12. Power demand has looked solid. Let's take a look at power demand. I mean, when you take a look at year over year, I mean, we're just continuing to grow more and more. This is demand on natural gas on the power side. So
typically, power has always had about a 2 to 3% growth in the natural gas side.
yes,
So I
yes,
think, and I mean, there were some years that were bigger because of some coal retirements.
right.
But I was just noticing in Kansas, and for Kansas is keeping their coal plant on in Western Kansas in order to meet the electricity demand of the company that's building EV batteries out there in Western Kansas. So the EV batteries have been built by coal-fired electricity. That's interesting.
Yep.
So anyway, I think that this will continue to be this way. We don't really have a good alternative for that. Renewables at the current pace can't keep up with the actual increase in demand. So that means that while gas might fall to a 1% increase every year, it's still going to be a 1% increase.
Right.
And Brian, I think we have an LNG plant coming on at the end of 2024 or maybe mid 2024, which could increase the exports that way, which would increase demand. So I think we could even see, I'm going to step out there because we put it in the title. I think we could see $5 sometime in the third quarter of 2024.
So let me ask you something. What would $5 gas do to demand?
See, in the past, we've had the ability to fuel switch, but we don't have anything to fuel switch to. We can't
Yep.
bring nuclear up. Coal plants are retiring. Renewables can't keep up with the demand. What do we fuel switch to?
Well,
I mean,
so
other
let's
than fuel switch to blackouts, I guess we could do that.
well let's take a quick look at this. And this part of the reason that we have electricity on here. We take a look at the daily summary, and this is the generation sources. And this is part of the reason that we have natural gas, NGLs, crude oil, refined products, electricity, and we're going to extend to crude oil. We're also getting into international, but take a look at just our daily delta between this. This is in megawatt hours. So what is that? 550 gigawatts? Is that right?
No, should be. Yeah.
Is that right? 550 gigawatts? Is that what it is? I'm less versed on power.
I think it is gigawatts.
Okay, so but let's if you know out there, let me know because this is coming straight from the EIA. But let's take a look at this. So what I see here is gas is making up the majority of the delta between. This is on an hourly basis. This is GMT time 9 to 22. So roughly, what is that? 13 hours. So 12 hours, roughly half the day, we have to cover a gap of so much natural gas generation. So the fact of the matter is that we don't have enough capacity to satisfy that on an hourly basis.
Yeah, that's just the swing. I'm talking about actual increase overall of 1 to 3% of demand. Is going to be hard to cover that.
Let's see. I'm just adding something. I'm sending a note back to Richard. So Richard, thank you for reaching out. And so Richard, I provided the link, so you should be able to sign up directly right there. And if you want to reach out directly, just drop me an email. We'd be happy to show you around. So all of this combined with, we track rigs, supply, demand, imports, exports. We also have asset maps that we cover where storage is, natural gas processing. We have a processing calculator, actually, natural gas processing calculator. Let's take a look at that real quick. So you can enter your own profile right here, enter your BTU, what your GPMs are, And this is what ethane rejection looks like for next month. So that impacts the natural gas markets. And so we track all of this, but the hourly consumption of natural gas, and when you look at how much is utilized on the electric side of the equation, we keep going up, up, and up. Let's take a look at this, because I think this data set, I mean, look at that. We went from basically 20 from a peak to 40 in the last 15, 20 years. So we've doubled our electric demand, and part of that is coal retirements, part of that is electric increased. And the fact of the matter is that as we increase our wind and renewables, wind and solar, it's going to put more strain on natural gas consumption, and
They handle the swing. Yeah.
anything that can't is going to be met by coal, likely. So as we do this energy transition, we're not going towards the direction that some people want to go. So let's see. So let's bring it back home. Let's bring
Okay.
it.
So let's sort of recap this a little bit. So when we talk about, let's talk about crude oil real quick. Brian, I believe that we're still going to be under $100. Now, when we say that, we're talking about a daily close, not a print, because you could print above $100 on any given day, but as a daily close, we'll be under $100.
Yep.
I'm a little higher than he is at $99.27. He's in the $95 range.
Here, I posted it out there. So here's our year-end targets.
And for Dylan, we're going to throw him in there at 98.50 because he's sort of splitting the difference. Really, Dylan? I mean, that's sort of mediocre. So the Nat Gas, we think we're going to see. We're already above $3. We're going to see. Really, I just don't think we'll get across the $4 mark as a close by the end of the year, but it could happen. Brian's is at 410. He thinks we're going to do it. I think what's more amazing to me is that we might actually just blow right past 4 and go to 5 when the new LNG requirements start coming on in the back half of 2024.
Right.
That's going to be an interesting time.
Yes.
So, and what winter's going to be delayed this year. It's not going to go away. It's just going to be delayed a little bit because of El Nino. And so we'll see that start happening in the back half of October. Probably won't see first freeze. Oh, we'll talk about that when we get him on here. But the first freeze is going to be a little bit more delayed than what you might think. And what else did we talk about, Brian?
Let's see. Well, we talked about winter forecasts, which you touched on. October, November are likely to be a little warmer than normal. And so that means that we're not going to get kicked off to a start of winter that quickly, but that means that the latter half of winter is likely to be very cold. And there's a lot of people are looking at El Nino and thinking that translates to warmer winter this year, but I don't think it's necessarily true. There's actually an inverse interpretation. And again, in 2 weeks, not next Wednesday, the Wednesday after, Brandon with Prestige Weather is going to be online with us here at noon, and we're going to cover a little deeper on end of season storage, which we only have a few more weeks.
That's right.
So I mean, the fact of the matter is that when we take a look at storage, let's take a look at the storage, and
we're about where we should be.
We are currently at well, that's east. But let's touch on this. This is important. 3.359 BCF or TCF. That's where we are. 3.8 is where most of the analysts are expecting. I'm below that. I'm at 3.7, maybe slightly above, up to 3.72. But I want to show you something. The East is coming off the highs of its storage. The Midwest is kind of in a good, comfortable place. Mountain is above But take a look at the scale. This is only 250 BCF. I mean, that's not a lot. Pacific is down. So when I take a look at the bigger areas that we're having, it's going to be concern. I don't think we're going to get there. And if the South is warmer than normal over the next couple weeks, we might have less injections in the South region, and that is one of the bigger areas.
And when we get Brendan on, I'm going to have him explain about El Nino and how it actually may cause a colder than normal winter in Europe. And that's going to be a big thing for us in moving the LNG out there. So
this is the chart I was looking for. This is the South. Take a look at this. That is one of your biggest storage regions. That's 1.4 TCF, kind of at the highs there, and we're way off that mark. We're all the way down at 1 TCF. So, and let's take a look at what. Let's take a look at when. Yeah, it was 2020 that peaked. And look at this. When I look at history here, I'd be a little concerned. I'd be a little concerned. So I think the analysts are going to be surprised that we're not going to be at 3.
I don't think we'll make 3.8. We might make a little above 3.7. We just don't have enough time left.
Yep. And so, listen, that's kind of our stance. We're looking at roughly hovering around 4 end of year target. And for reference, we're currently trading around $3. And I think this is well supported. So the fundamentals, if production falls in the way that we expect, if demand continues the way that we expect, I think it's not unreasonable to see 5 this winter, and that is going to change some things. And one of the other things that we track is, in addition to all the rigs and bases, but we also track where TTF and JKM pricing is. This is currently weighing down Henry Hub, and I think as these spike or have the propensity to spike during the winter, we will see some follow through and some follow through on Henry Hub. So if anybody has any more questions, we're probably going to wrap up in the next 3 minutes. So if you have any questions, reach out or say anything. I did include my email address. So if you'd like to reach out, there's also information down below. Any closing or parting thoughts, Bill?
No, I just think it's going to be an interesting winter. I think the gas is going to continue strong. I think oil right now, what we're looking at is I think what we're doing is seeing a lot of response to hype. And so I think we'll see that oil price come back. And I think weather will be a little bit delayed, but that doesn't mean it's not going to be cold and we're not going to burn as much as we usually do.
Right.
We're going to burn it in different months.
Yep. I think you're right. So listen, folks, I think that's about all that we're going to cover today. Reach out to us if you have any questions. We're here. We're going to be here next week. We're probably going to touch a little bit deeper on crude oil. We touched on that last week, and we're going to go a little bit deeper. And then the following week is going to be kind of a in-deep weather forecast with our friends at Prestige Weather. So if you have any questions, reach out to us. And let's see, did we have any comments? Okay, Rick, thanks so much. Thanks for joining. Vernon, appreciate seeing you. I know you're always out there. We definitely see you every time. So thanks so much. Really, really appreciate it. And I don't have any more. You got any more?
I don't think so. I think it's time to roll the logo.
All right. And hopefully you guys got some lunch. Have a good day. I just wanted to say, Richard, if you sign up today, we're going to send you some gear, some T-shirts, and all kinds of stuff. And Giorgio, thank you. Appreciate you showing up. So,
Hey, folks, we got merch. Call us if you want to, or send us a note if you want some.
yep. So, thanks so much. Have a great day.